Hi, I'm Jim Juback, and welcome to this week's Quick Pick video, Rockwell Automation, ROK. Now, the tricky thing here is timing. Depending on what's going to happen in 2023, you might decide to buy it later. Morningstar right now is saying the stock is about 15% undervalued, but if you look at a chart, you notice that there's been a really strong rally in all of the sort of industrial equipment makers, so the stock has been doing really, really well. You might want to, depending on your view about where the market is going to go, you could split, you could dollar cost average into it. I'm going to add the stock to my long-term portfolio because I think over the long term, you'd really like to own this. But whether that means getting in now, getting in later, dollar cost averaging over the next 6 months would probably, or 9 months or 10 months would be a good idea. Anyway, this is one of the preeminent industrial automation companies. They make intelligent devices, software and control, and lifecycle services. Their big platform is something called Logix, which includes programmable controllers. The whole sort of transition that's going on right now is a movement away from robotics that does discrete tasks like in auto assemblies to robotics that handle discrete tasks as well as processes, sort of like chemicals or pharmaceuticals or food production. And because Logix is programmable and it works with all kinds of third-party software, once it's embedded in your production cycle, it's unlikely to go out. It's very, very sticky. So this is something that I'd really look at over the next 5 or 10 years. It's clear that more automation is coming. CEOs always really hate workers because they demand things, and robots don't. It's one of the key rules of contemporary and 19th century capitalism too, that workers are a necessary evil, and if we can replace them, that's really a good thing, right? No, but that's, I think, the way a lot of thinking goes. If you're a historian of labor and capital, if you go back to something like the big homestead strike in the steel industry in the 19th century, and you realize that the big problem was not the fact that workers were demanding an extra 50 cents a day, but that they were demanding recognition of a union. And Carnegie and Frick crushed the strike by calling out Pinkertons. There was armed warfare. There were cannons being fired across the Monongahela and the Allegheny. It was industrial warfare. And they crushed the workers' union, and there was not a union at the steel plants until the 1930s. So it's all about control, which is one of the things that drives robotics into the workplace, as well as the fact that it's a way to increase margins and productivity. And productivity really is a crucial question for a lot of companies. There are company anecdotes that say, hey, we were brought in by Kraft Heinz to get a 5% increase in productivity out of the line. We got a 10% because they're able now to do real-time analytics using the cloud, and that really helps fine-tune production. Right now, you're looking at not a bottom, but operating margins are down to about 17.2% over the last 12 months. 5-year average is 18.5%. So you've got, if we just move up to the average, that's a good thing. Return on invested capital, last 12 months is about 15.08. 5-year average is 24. They've been spending a lot of capital rebuilding inventory after the supply chain crashes of COVID. So all that means that this is a stock that, despite its run up in price, as you can see on the chart, this from the September lows around 210 up to now we're at 270 or so. Despite that run up in price, this is still a stock that's, I think, trading at a very reasonable price. The question is whether you can get it at an even more reasonable price if the bear market returns in 2023. Thanks very much for watching. If you like this video, please give it a thumbs up. You can get more videos. You can sign up for our YouTube channel. That way you get notification of when we're doing the next one. We're doing about 3 a week. If you want more of my stuff, including the long-term portfolio, the 50 stocks portfolio this stock is going to go into, you can go to my free site. That's jubekpicks.com for even more portfolios, including, of course, the 3 that are on Jubek, the free site, but 3 more, including options and ETFs and even longer-term perspectives. You can go to my paid site. That's jubekam.com. You can find links to all that down below. Thanks very much.